So price move in two different ways. Price move only in two different ways. The price will either trend or it is going to be a range, which means the price will move in a certain direction or it will move, it's either move upward, it moves downward, or it's gonna move in a straight line, which means if we're having a downtrend situation, we're going to be having the price moving downward, or we are going to be having the move in a straight line for some time. So those are the two ways the price would move. It's either it ranges or it trends. And in my previous video, I had a question from a subscriber who was asking me to make a video on how to identify when the market is ranging, and how to identify them, and how to actually potentially enter into trade when the price is ranging. So this is what I'm going to be talking about in this video, and I'm going to be making you understand everything that I need, or everything I put together before I place a single trade when I'm trading a ranging strategy, when I'm trading a ranging market condition with my personal strategy. So the first thing I'm going to be talking about is how to identify a range, how to draw your levels correctly, which means you have to draw the support level and the resistance level, and then I'm going to be telling you guys how to enter a trade, my confirmations, that are my entry confirmations, and whether or not I wait for a retest or not. And I'm going to be giving you guys the reasons why I do not wait for a test some of the times. So without wasting further time, let's get started. So now the first thing we want to do is to want to pay attention to the trend, because the trend, which is the major trend, is going to be our one of the reasons, one of the ways, one of the things we need to pay attention to, because we are analyzing from the larger scale down to the lower scale of the market. Now, looking at this chart, you would see that this was a very strong uptrend, because you see that the price we are moving in favor of the buyers from all these levels. You see, these are lows, these are higher lows, these are higher lows, all of these are higher lows, these are higher lows as well. And you can see that we're having higher highs, higher highs, higher highs, higher highs, and higher highs as well. Now the next thing is, if we came in and the price were somewhere around this level, now you want to pay attention to the retracement phases of the price. I told you that when you have identified your trend, which is a major trend, the next thing you want to be looking at is the minor trend, because that is where we spot our entry. The reason why you came to trade is to try to enter a trade, right? Good. So now you've identified the major trend. The next thing is to identify the minor trend, how you can potentially enter into a trade. Now, if a market is trending upward, you are going to be having two different retracement phases, which means you either have when the price trend downward, or you have it range, which means it will be moving in a straight line. It won't just move in a straight line like I'm saying this, but I'm saying it will be bouncing around the same levels multiple times. Now, if we're having a retracement on we have identified this to be an uptrend. Now you see that on this level, the price created this high, then created this low. You see, then created the lower high, created the lower low. Now this is a retracement phase, right? Because this was a run now this is a retracement. Now you can say that we can apply our trend line on this resistance level, and then we can wait for a breakout on this level to place a trade, and you see the price will run upward. Now this is a minor downtrend in a major uptrend, right? So we're having a major uptrend, and then we're having a minor downtrend. Now we can also enter trades like this. Now you either have this minor downtrend as a retracement, or you are going to have when the price will be ranging, which means it is not a downtrend and the minor, or not a minor downtrend. We're having the price moving in a straight line. So now you can say now that the price is moving in a straight line. Now, you won't just identify it at the first time you came. That's why you need to sit back and wait until you have all the confirmations ready for you to enter into a trade. The first thing you want to do is, when the price has now run, it hit this level, right? It hits this level and then it fell down. This is a low. Then it went up and it couldn't break this previous high. You see, this is an equal high. It came all the way down again and created an equal low, which is also now is almost the same with this new low. Then it rose again and created a new high. It fell down again and created an equal low. Now, these are the evidences that will show you that the price is potentially going to range, because we are not having lower lows. If we are having a minor downtrend in a major uptrend, we need to be having a minor, we need to be having lower lows that we are having here. This is a low, this is a lower low. In this market condition, it was different. We're having equal lows. So those are the evidences that you need to be able to spot when we're having a range. Now, you see again, the price rose, created this equal high as well with this one. It fell down again and created a new, an equal low with this one as well. So this is an evidence that it is also now ranging, because this is a straight line. If I apply a level on this, on here, you see that here, this is a straight line, and the price has been hitting that level for a very long time now, and you can say that this is a range. We cannot draw a zone out of it like this and watch the price respecting it. So this is a straight line, and you see that the price, we are testing it multiple times in the market. Now, having had this level drawn out, the next thing is to also draw a resistance level, and then we have it here. We have a resistance level here, and we are connecting all the levels together to have a zone. This is a zone of the resistance. Now, you will see now that we have identified the minor retracement phase, which is now a range, because we have gathered all the evidences we need. These are lower lows, lower lows. These are equal lows, and all of these are also equal highs. Now, the next thing to do is to identify our entry. What should be our entry trigger, and how do we enter into this very trade? Now, we need to enter the trade with a breakout. Breakout is what we're going to use to enter into that trade. Now, how does the breakout look, or what do we consider to be a strong breakout, and how do we enter? What do we consider before we enter into the trade when we're having a range market? Now, what we need to consider is a breakout either side of the market. We are either going to be considering a breakout on the lower side, or we're considering a breakout on the higher side. If the price is trending upward, a breakout on the resistance level is much effective, because we are now walking in direction of the trend. But if we also have a breakout on the support level, it is a sign that the trend has ended, and we should be experiencing the price to be falling down in favor of the sellers. And that will now mean that this is now unequal. This is now a double top pattern, and it means now that the price should now be falling downward. Now, what does the breakout look like? This is the big question. What does the breakout look like? Now, the breakout is, we need to have the market close above the horizontal levels that we have drawn. Now, the market needs to close above the horizontal levels. Now, you see that this is a pattern the price has created. If you're moving straight like this, and if this pattern breaks in the future, we need to be experiencing a different market scenario, because I told you that the price will always move in structures, and these structures change over time. It changes over time. The reason why it changes is these things you see on the chart, the candles you see on the chart, are just a representatives of people's emotion. It's a representative of people's lives, people's money, and everything going on around the world, right? So it is going to be different at every different time. Now, let me give you an example let me give you a clear real life example. Now, if you are traveling from point A to point B, if you do this every day for a period of a year, 365 days in a year, you are going to be having different experience each time you travel from point A to point B. The reason is because people are going to be having different emotional conditions every day. Every day is not going to be the same. At times you'll be happy, other times you'll be sad, at times you may be late, other times you may be early, at times you may be having some other or activities that you need to do that may keep you or make you faster or slow. And this is why you are going to be seeing different traffic conditions every single time, because every day is just different. Now this is why this is also the same thing with trading, because every day people come to trade, they are trading with different psychology, different emotional, different emotions, and different stuffs going on in their lives. And you see, this is why we are having that the pattern changes over time. It moves it can move the same way for a couple minutes, but it's going to be changing as time progresses. It may move the same way for a period of an hour, 2 hours, or even 3, 4, 5 hours, but after some time there's going to be a change in that market structure. So you see that this is what a strong breakout should look like, which means the price is now moving and then it closes above the horizontal level. You see that when the price closes above this level, you're going to place your trade immediately. The price closes above the resistance horizontal level, and when the price closes above, you need to place your trade. Now if I were here, I would place my trade on this level, and you can see for a 5 minutes, this is 1, 2, 3, this is 1, 2, 3, 4, and this is 5. 1, 2, 3, 4, 5. So this would have been a very smooth win, and you can see that this strategy works 75 to 80% of the time. Now here's the biggest question: how do you need to wait for a retest to be able to place your trade? Now I'm going to tell you my own personal experience. Now I do not wait for the test to place my trade if I have a breakout, and I'm going to tell you why I do not wait for a retest. Now most times the retest do not come, and if they come, they take way too long to come, and you will now be waiting and waiting and waiting and waiting. Most times you get fed up waiting, and then when you step out before you come back, you see that the chance is already gone. Now waiting for the retest most times may work more effectively, right? It may work more effectively, which means that the price broke this level. Now it rose again back to this level. It may use it as a support now, because this was a resistance. It broke it, it moved up and returned back. It may use this level as a support to move again in favor of the major trend. But you see, even if you wait, sometimes it doesn't work. You see, it came back here and it didn't work over here. You see, it doesn't mean it will work even when you wait for that retest. So personally, I just do not wait. I just place my trade when I have the breakout, and I'm just focused on trying to win as many trades as possible. My focus is not trying to be right in the market. My focus is just how I can win as many trades as possible, because the more trade I win, the more profitable I become. So this is everything about how to trade when the price is in the range, and I'm going to break down again. I'm going to come again so you can also let me just do a quick recap. The first thing to do is to to analyze the major trend, which on this condition is a strong uptrend. Now the next thing is to wait for the retracement phases. Now make sure you are not having a minor downtrend. If you are having equal lows and equal highs, it is a sign that the market is ranging. The next thing you want to do is to draw your levels correctly, the horizontal level, connecting all the wicks together with all the bodies of the price. So now we see that I have this very horizontal level, now connecting this wick, which is the lowest point the price has gotten, and then this is the last part, also connecting the lowest part of this candle as well. You just need to connect as many areas as you can connect, which for me would be of value to you, but make sure you connect the lowest part and also connect the highest part as well. This is the wick connecting this other wick as well. So this is the body connecting these bodies as well. Now, having done that, the next thing is to wait for a breakout, and you can see that the price will break strongly above, and when the price breaks above, immediately it breaks and the candle closes, you want to place your trade, and that is just how to trade. Mind you, this is the 1 minute candle time frame, as you can see. So it is you can apply it on the 1 minute time frame, and I can assure you that this is a very effective trading strategy. So I hope you've learned something and you can apply the same when you decide to trade. So if you find anybody in this video, go ahead and smash that like button. And if you are new here, I do trade live, so if you miss any of my live training sessions, do well to check the channel down below to watch all these videos and also learn and apply. And do not forget to subscribe to the channel. Don't forget to also turn the bell icon so you don't miss out on any of our important live training sessions. So on this note, I'm going to end this video here, and I'll see you again next time. But then, keep trading, keep working hard, and have a good day.